probably just go straight into the meat of what we are discussing today. That is capitalizing on disruptions to the status quo. Each of the companies that you represent here today or that you found and manage today are noted as disruptors in their various spheres. And that is a story that we are keen to learn how to share part of, because we see we can draw positives from that, and juxtapose it against whatever is happening in the macro environment today. So there are tales of doom and gloom, but we still have pockets of success stories like we have here today. So I'll start with Mrs. Akikungwe again and ask that, how have you seen demand change in your business given the current macro headwinds and challenges over the last 12 months?
We have seen in some sectors, what we have seen is a marginal growth. So a little below our expectations. But in some other sectors, because before we started manufacturing, these companies were actually importing the products that we manufacture. So what we'll see, or what we're beginning to see, is a very high demand for the products. One is it's Naira invoicing. They prefer to pay in Naira than pay in foreign exchange. They have a product here that is of the same quality, and it just doesn't make sense any longer to try and import these cards. What we have seen in the government sector is there's a lot of desire, because a lot of the solutions that we bring is enabled towards helping government increase their internal generated revenue. So whether it's state level or federal level. And so what we've seen is a bit of a holdback, largely because there is less spending. And what we have done is to approach it from a public-private partnership point of view, and that is really working. And government will desire it because in the long run, it helps them to increase their revenue. So we focus on that. So we are seeing demand in some sectors marginally growing, but don't forget that we do make smart cards, and these cards for the banking sector have to be renewed every couple of years. And so the demand will continue to be there. In some sectors, as I said, they were used to importation. Now there's local manufacturing, Naira invoicing, so we expect demand to increase. In the government sector, we're approaching it from a private-public partnership approach, working with government to ensure that they are able to carry out these solutions that will enable them have a long revenue stream of income.
Mr. Apochi, speaking about the government, the cashless policy has been in place for some time, and one wonders how this has helped you to drive the volume of transactions on a daily and annual basis on your platform. Can you shed more light on that?
We've seen growth, both in volume and value, and I'll speak more to the growth rate that we see and we think we are going to continue to see than the absolute numbers. Over the last 3 to 5 years, we have seen growth rate at about 25%, and we are confident that this will continue for many more years to come. And the reason is simple, because we are in an environment or a market where the transactions that we see today, particularly at the retail level, are driven largely by cash. So what we have today is about 20% or less of electronic payment when you go to the retail space, and 80% cash. Maybe a little under 2% of that will come with checks and so on. So the growth that we have seen over the last few years, and which we will continue to see for many more years to come, should be about 25% year on year.
Mr. Savara, you manage a company, a manufacturing concern of repute. Given the challenges with shrinking disposable income, people trading down in terms of looking for value products rather than what they typically would consume, given the current challenges in the economy, how would you say this has affected your business? Your business is noted for innovation. I mean, you've churned out over 50 products in the last couple of years, and these have gained significant market acceptance. But how, on the balance, would you say this has affected your business?
For us, it has always been drive to formulate a product or introduce a product which the customer derives maximum perceived value from. So we have a large innovation R&D working, and now we are only talking about the beverage, the CHI products. There, of course, we are engaging close to 2 million customers a day. So that is a continuous drive to ensure that we are able to get to the customer the right product at the right price. We do see that there is a little slowdown in the offtake of higher price products, but since our portfolio is so well structured and laddered, we have an offering for a customer, for a consumer at every price point. So that is very important for us in the way which we run our portfolio in the beverage side. In the agri side, of course, we see very interesting development, positive developments. We see the agri business growing. We are investing more and more into backward integration. So we continuously say these are difficult but very, very exciting times. Which we will see more investments coming in, and from investors from all over the world. Nigeria will still continue to be the destination. So this is just a phase, and it's a very exciting time to invest if you are able to identify the right segment.
I'll come back to you on, discussions around backward integration and, the investors that you mentioned, because these are positives that we need to amplify. Mr. Verheyen, you are a supplier to the industry. You occupy a very enviable position, and I must confess, 1.8 billion cans is not a joke per annum. So how have you seen the business cope in these trying and challenging times, particularly as your off-takers are also facing headwinds?
The number 1.8 billion cans, first of all, just for clarity, is the entire market. We supply about 1 billion cans, and the other 800 million is our competitor, and some cans that are still imported into the market. In terms of how we think of the economy going forward, the most important thing is we're long-term investors. So like Mr. Savara said, this is just a point in time, and we don't believe you can really overreact now, because you'll just hurt your future prospects. So that's the most important thing to state. The second thing is that actually in the first half of this year, we sold more cans than we have ever before. So what has changed for us is our growth has slowed down, but we're still growing slightly. So we're nowhere near our projections, but we've not lost revenues. But of course, our profitability has gone down significantly. But top line is still very good, and this is not just volume, also value in naira terms. Of course, not in dollar terms. But so that's held up quite well. But I think the main reason for that is that first of all, cans are a very small portion of the overall market. So 90% of drinks are still consumed from either PET or glass bottles. So we're already tiny, and it's unlikely that we're going to find a lot of people substituting out of cans. So even though our product has become a lot more expensive for our customers, who are the brewers and the bottlers, they're all in a fight for market share. So it's unlikely that they're going to suddenly stop stop supplying cans to their retailers because they want bottles. Now cans they're more expensive than bottles. It costs, I think the unit cost of producing a can is less than the cost of producing a bottle. But the difference is that a bottle can be reused typically 15 times. In Nigeria, maybe 25, 30 times. A can is only one way. So it's actually a more expensive packaging type, but it's not one where people will substitute out of very quickly.
I was going to also ask you about, you talked about the bottles being reusable. So we're looking at backward integration, issues around either recycling or looking to produce some of your raw material content locally. And what are the plans for GZI in that regard?
So GZI in that regard is extremely difficult. 70% of our cost of production is aluminum coils, and we just cannot get the quality of aluminum coils locally to package a drink. So, they must be imported. We literally have no choice. And that is why, indeed, the advantage of bottles versus cans has actually increased a bit during this time period. But what we've done with our customers is we have a pass-through on the cost of the aluminum. And so, they basically take the cost of that. And it's a pass-through also in dollar terms, because we must procure it from offshore. But, there's very little that we can do to sort of backwards integrate in that business. There may be other things we can do, such as trying to reduce regular operating costs, trying to reduce the number of expatriates versus local employees, trying to export a lot more cans so that you get foreign exchange, and trying to set up facilities outside Nigeria. Those are the sorts of things that we can do to try and work through the current situation.